What's going on, everyone? My name is D. Anthony with evolutiontraders.com. We are going to be taking a look at the NASDAQ futures, kind of going over some levels, some price targets, some things that you should sort of keep in mind going into next week. We're coming off of another red day. Right now, currently, the NASDAQ futures are down 1.5%, 171 handles on the day. Now, one thing that I do want to kind of keep in mind here, this is going to be the first close below the 50-day moving average going all the way back to the beginning of November. Okay, so if we kind of look on my screen, I know I've got a lot going on, but I want you guys to kind of keep in mind and kind of notice this channel line that we have here. This red line here is the 50-day moving average. Now, we reclaimed that 50-day moving average on the 10th of November and had a 4-day run up from a price of around 11,674 all the way up to a price of 12,120. So fantastic move there on that 4-day run up for the bulls as well as the tech stocks. But realistically, the last month we've been trading with inside this channel, in between the 50-day moving average and this upper channel line here. You can see multiple attempts to try to break free of this area and rudely being rejected. So one thing that I want you guys to notice, this pattern here, this flag pattern or whatever you would like to call it, has broken down. If you have been day trading or scalping, this is kind of a perfect market to practice your scalping and to practice your day trading and to kind of practice your range bound trading. So what that means is when we come to the bottom of the range here, you're going long. When we obviously come to the top of the range, you're going to go short. When you get to about the middle of that range is when you're going to be taking your profits and just rinsing and repeating. Now that sounds a lot easier said than done, but that's just the kind of way it was, right? You can't really put risk onto the long side when we haven't taken out the top of the range, and you can't really get short and just kind of sit short until we break down. Now today we finally got that breakdown. Looks like we are going to close below that 50-day moving average. And we've got a lot of real estate to the way down. So if we kind of look at potentially the next channel level or the next major demand level where we're going to have some support, that price is going to be 10,798 on the NASDAQ futures. Now that doesn't mean that it has to come all in one session, because that would be kind of a drastic move, almost a 400-point move. But it could, be drawn out over a few days, maybe even a few weeks. Now, obviously, you're going to expect some bounces, but until the NASDAQ can reclaim the 50-day moving average on a daily candles close, your bias should be 95% short, okay? Now, unless you are an experienced scalper where you can use that 2-minute, that 5-minute, that 15-minute, even 30-minute intraday kind of chart to find those little sneaky areas where you can get in for a quick move on a dead cat bounce, I would mainly be looking to short the pops, okay? So anytime we get some green open or anytime we get a nice little rally, look for that nearest supply zone and short at the supply zone down through the lows. Obviously, your macro flush is going to be any loss of today's lows here. That price is going to be around 11,266. So kind of keep that in mind. If we do bounce on Monday or Tuesday, kind of chop around and then don't really reclaim the 50-day moving average on the close and start to roll over, you could do one of two things. You could take the short position there, use the 50-day moving average as your stop, or you can kind of wait for it to consolidate and lose today's lows, and that's where you're going to want to get short. Now, if you do trade a lot of tech stocks, you trade things like AMD, Nvda, Tesla, Microsoft, Apple, and so forth, you're definitely going to be wanting to monitor the NASDAQ futures, because if we do start to give up today's lows, you would expect that those stocks are going to follow suit with it. If we kind of take it, look at some of the tech stocks like Aapl here, Aapl has already lost their 50-day moving average 3 days ago. So if you kind of look at what happened to Aapl when we did close below the 50-day moving average, we've had 2 consecutive big red days, and this is the first close underneath the 50-day moving average on the NASDAQ. So you got to give a lot of these stocks enough room to kind of catch up here. If you kind of look at where we're sitting right now on Aapl, we've had multiple demand zones here, 1, 2, 3, and now 4 multiple touch points here. We do have a line in the sand. That line in the sand is going to be today's low, and that price is 133.74. Now, if we do get some sort of dead cat early next week, again, if you're looking to try to take that bounce, what you have to do is use today's lows as your max pain. Today's low is going to be your stop. You're going to look to bounce that and take some quick profits on the way up, let it consolidate or do whatever it needs to do. As soon as we start to lose today's lows, that's your potential to try to get down here for a price target of around 128. Let's just take a look at a couple of more. If we look at Microsoft, for example, same thing. We still are above the 50-day moving average, so technically no damage is done here for the bulls. But again, coming off of the third consecutive red day here, anything below 243.53 definitely has room down to 239. If we take a look at something like Tesla, which has been absolutely getting destroyed the past couple of weeks, another red engulfing candle here. 150 is going to be the lows. I actually have to pull up the weekly time frame to kind of see a bigger macro picture here. On Tesla's chart, looks very, very disgusting. Okay, so Tesla is technically damaged. Tesla is below its 50-day weekly moving average as well as the 200-day moving average on a weekly time frame. We have to kind of go all the way back here in time. If you kind of look at today's where we're stopping at here, if we kind of go all the way back into 2020, you can see that we had some prior resistance here going back to like August, September, October, where we had a little bit of resistance here before we finally broke out. I would expect that this is going to act as a short-term kind of support here for Tesla. Maybe we get that dead cat bounce back into that 160, 165 area. But again, just keep in mind, if we do start to lose to this week's lows, we definitely got a lot more room to go, because that would be breaking down this prior resistance here. Next bit of support that we're going to have is closer to around the 120 mark. And let's just kind of look at one more here. Let's look at a semiconductor. So let's look at Nvda. If we kind of look at Nvda here, nasty rejection off the 50-day moving average today, or excuse me, this week. If we look at the weekly kind of candlestick here, right now, as of now, no technical damage has done to this little bit of run up coming off of the bottoms here of around 107. But if we do start to lose 162, we've got a lot of room down to around 155. And if we kind of pull up that daily chart here, you can see 1, 2, 3, 4 consecutive down red days here. Again, no technical damage is done yet for the bulls. We can completely bounce off this 20-day moving average here and start to make an attempt higher. Again, not really looking to go long until we can reclaim that 5 and 200-day moving average, which is sitting at around a price of around 173.66. What I will be looking for next week is anything below 164. Short position, we've got a lot of room down into that 155 zone. That's going to be my next big trade here, and I'll just kind of sit and wait patiently for the 164, or I'll sit patiently and wait for the 173.67. Guys, I hope this helps. If you like this kind of technical analysis, make sure you like, comment, and subscribe. Also join the Discord. That link is down in the description box below, and I will catch you guys all in the next video.